Hey guys, I trust you are all well. Thanks to Mai for hosting the video seminar. I'm not sure how many of us have been with me for 5 hours already today. We just finished 3 hours of the Wednesdays at the market with George, the open session, the opening of the European and London markets. And earlier on, we had two markets looking at the Hang Seng 50. So we are in a phase where we've just gone past what I call the open of the market. And I'll explain that to you shortly and what we're looking at. So the way I look at the market, I break it into segments. There is the open of the market, when the markets actually open, like the Hang Seng 50 opened at 3:15 my time. So the first 2 hours of that trading is the open. The open is really the first 18 to 24 candles or bars. So we're talking about the first 2 hours of the market. And that is important for me to segment that, because there are particular strategies that are only trade when the market opens. Be it the open of the US markets, which will come through GMT 1:30 p.m. To 3:30 p.m. That's a zone that I look at. And now we've just come 30 minutes ago, we finished the phase that I call the open of the European and London markets. That is important because beyond the open, I'm not looking for those three strategies. And those three strategies are breakout model. I'm looking for tight trading ranges. And I'm also looking for reversals. Reversals are very interesting for me because if you can get into a reversal at the open, you might be able to catch the high of the day or the low of the day, and you're going to hold your trade for the rest of the day and optimize your returns. But beyond that, I'm now searching for trends and trend breakouts and pullbacks. Okay, that's what I start paying attention to. So 8 markets we have. Let's just go through them. Any questions you have, guys, just pop them into the chat box. So all of these levels of support, resistance, etc., is stuff that we been setting up since the morning, since 8 hours ago. We set all of this up. Low of yesterday. This is on the euro. High of yesterday, midpoint. So in the middle of a trading range. So that high is very important for us, present high of the day. These lows are important for us when looking at the euro. So that's a key low that we want to keep track of. Because we're looking at 8 charts, when we start flipping through them, it's just going to save us even to keep analyzing them all over again and say, where am I? So right now with the euro, middle of the trading range, there's nothing you want to do in the middle of the trading range. You want to wait until the market gets to this high or gets down to this low. It might bounce off this key higher low, which is fantastic for us. We'd keep a note of that. But the most significant low of the day is this support level here, which is the low of the day. Nikkei 225. Again, we are in the middle of a trading range, higher low, very strong bull breakout, two-sided price action, small pullback bull trend, still a very strong bull trend. So bulls broke out, didn't make a strong breakout, came back, but that higher low is very important for us. So on our way to see if the market gets back to test that level of support, high of yesterday, and turn here for us to accelerate back into the trading range or create a double top. Bitcoin, middle of trading range, so we're not going to waste a lot of time on that. We want to wait to see if we get to that high. or we get somewhere here, test of that low, creating a wedge low, test of that low, or a higher low. UK 100, absolutely interesting for us. We've been watching this for a while. We had this perfect double top being formed here. Okay, that price level is exactly the same as that price level. And at that point, we're looking to see if we get a lower high. Anyway, in here, we didn't get a lower high. And when we had the breakout, we were saying, well, let's see if we get a failed breakout, to which we got as a failed breakout. And after getting the failed breakout, now we are looking for a trend that is good. Trend price action. What we want to see with trend price action is a pullback, but we need a deep enough pullback for us to see if we can take that trade, and our stop will be there. So we keep an eye on that. We don't want to take the trade anywhere in here. This is the middle of a trading range, double top, and that low. So lower high. Where is the lower high? Not yet been created, but very good bearish price action, which we're happy with. Double bottom, fantastic. We want to see if we get a lower high. Why is that good bearish price action for us? Well, we came off the double top, failed breakout above the double top, which creates a wedge pattern. Wedge is simply 3 pushes in a direction. Okay, and because we're out of that open range, we're not taking the reversal trade. If this had occurred within the time frame that we're looking for the reversal trade, we had marked this up here for the guys right here, as that is the area where we put our stop. Okay, so if this had occurred in the right context, you take a reversal trade. There's nothing for us to take here. We need a 2-bar reversal. That's a doji. We don't want to trade beneath a doji because that can fail. But assume we had a distant enough 2-bar reversal. I'm looking to the left to see if I can find one. Okay, we didn't get one. But imagine with a 2-bar reversal here, that would be a fantastic trade to take. Wedge 1, 2, 3. Put a stop above the measured move, and then just hold your trade and see how far you go. But yes, failed breakout. That's a doji trading range price action. You don't want to sell beneath a doji, and whenever you see trading range price action or doji, you expect that the breakout will fail at some stage. So let it fail, let it come back, let it give us a lower high, a decent enough 2-bar reversal, then we can take a trade. And if we do get the trade at that point, we don't have to wait for, we don't have to put the stop at the measured move. So high on our list. German 30, DAX 30, top 30 companies. Your broker may have the German 30, or they may have the DAX 40. Whatever they have is fantastic. What we're waiting for, we had a gap up here, which we looked at when we were looking at the open earlier on. And we questioned the fact that the bulls would have such a huge gap up, but then the first candle was a bear candle. That first candle gives us a lot of information that in a gap up, at least we're expecting that the bulls controlled the first candle, but they failed to control it. The bears controlled it. So that sends information to you that the bears are strong in the market. Yes. So now when we see this bearish price action, this bearish price action is not a surprise for us because now we're in the zone where we're looking for trends. So we're looking for the bear trend to form. If the bear trend forms, we want to wait for the pullback. So let the bears do their stuff. So this, at this point, this is our low of the day. So obviously, we already have a new low, but let's wait to see. If we get strong candle closing beneath this low and follow through, then we have a bear breakout. Then we look for the pullback, and we can trade the pullback and decide where we put our stop. So now we are in the phase where we're looking for trends. Bit of a problem for the bears. Bears are strong, breaking beneath an inside candle, which is not good signal candle. So why, if they're strong, why are they failing to put a close beneath here? So we just need to wait for more information. S&P 500. Take a look at that. Okay, you can see when we're in the market earlier on. I'm going to take it off now because the structure of the market has changed. Top, we're waiting to see if we get that top tested. So we wanted to see a double top. We didn't get a double top. Okay, you could argue and say that's a lower high double top. Well, if that's a lower high double top, if you were to take any trades with a setup, that's a stop. But we don't trade the double top. The double top is our setup. We then need to wait for the lower high, which we did not get. Okay, that's not a lower high that you trade because with the 6 candle separation, if you look at your charts, enough charts, 100 charts that have the same setup, you'll find that if you take a trade within 2-3 candles of a lower high, there is always a reversal. So we waited for that lower high, we didn't get it, but the double top we would have wanted would have been to test here. So like there, we had a double bottom, and now we're going to see what happens when we get to this low. Is the market going to turn here, give us a reversal after this bearish price action? We would need another opportunity to go higher, higher high or lower high. Gold. So gold was in an interesting phase. We had this expanding triangle top. And when you have an expanding triangle top, it's a form of a trading range, because you have an expanding triangle bottom. The market is contained within this expanding triangle. Now, if the market is contained within the expanding triangle and you have the expanding triangle top, you're anticipating that the bears who have created this wedge pattern. So bulls went up, bears sold off. Market went up, bulls, bears sold off. Market went up again. Are the bulls going to sell off again? If they're going to sell off again, it needs to happen within this area. They need to break beneath this level. That's the trading range. Give us a couple of trend candles, pull back, and then we can look to buy. Now, we had this trading range price action. With that trading range price action, you can get a lot more information. That high, that low, bulls break above this trading range, which they have done. They want to make a measured move. The measured move is up to here, which will be testing a key level of resistance, which is the high of yesterday. And the high of yesterday is a level of resistance. And if the market turns here and gives us a reversal, we're going to be looking to go short. If the bulls are strong, well, they need to give us that candle, follow through candle, and break above that. But if you go to the day, which will look a bit messy because of all the stuff we're doing on the 5-minute time frame, but enough for us to get the story out of it. So this is a daily time frame of gold. But I have coffee. It's been up since 3:15 a.m. my time. And it's 11:45. Absolutely enjoying the time with the guys in the market, but so grateful for whoever came up with coffee. So gold on the daily, to give us context. Now, every single day that you're coming in to trade, there's things that you have to do as an absolute minimum, as an intraday trader, trading the 5-minute time frame. Let's talk about that. Low of yesterday, high of yesterday. And you need to look at the 3 candles preceding that. What information can you get? Really look at the last 3 candles before today to see if there's any indication get of what is likely to happen today. Okay. Now, yesterday, tail at the top, at some point was a huge bull candle opening at the low. but sold off to close beneath the high of the previous day. Previous day before that, doji candle, tails on top, tails on bottom. Previous day before that, bull candle, but at the top of a trading range that's forming. So if you ever look at this, if you were to just plonk your line chart, you can see based on the closes, market has been going sideways for a while on the way it has been closing. First attempt to get to a new high, but the new high is still within the low that was created by this huge 2-bar reversal that we have here. So if you're a bear, what's going through your mind? If you're a bear, you're saying, well, we had a 2-bar reversal here, the market got up to here and we sold off. So all I'm waiting for as a bear is another lower high. It could be a higher, this higher than that. So a lower high double top, but that high is higher than that, and you want to sell it off, okay, because we are in a trading range. However, on the other hand, if you're a bull, you're saying, okay, bulls were pretty strong. Yeah, we have trading range price action, but we've created a double bottom. We just think this is a pullback as far as bulls are concerned, and our double bottom is going to hold and we're going to accelerate. Okay, but what you're going to think of is the immediate present trading range price action. So anticipate that the bears who have been selling into the close will come again at this high and attempt to sell off and defend these lows. If the bulls are strong, they really have to put a close and that hold it without a reversal. But we anticipate a reversal to come into place because we trade in the 5-minute time frame. We can get opportunities, we can get bearish trends forming during the day. And that's what you're going to be looking at. Just quickly check the question. Excellent, brilliant. Thanks, Richard. All right, guys. So getting back to the 5-minute time frame. So remember, we are on the daily, we are in a sell zone as far as the bears are concerned, the top of a trading range that has lasted almost a couple of weeks. If we come back to our 5-minute time frame, this expanding triangle, it's a reversal pattern, expanding triangle, 1, 2, 3, expanding triangle, bottom 1, 2, 3. So that's a pattern that we look out for. And we have reached the measured move of the trading range that happened at the top of the expanding triangle. Now, at some point, that was the high of the day. So that's no longer the high of the day. If the market closes here, the high of the day is up there. All we want to wait to see if the bears are strong, failed break up above the high of the day, failed break up above this measured move, give us a strong reversal bear candle. And then because we are not trading the open, we're not taking reversal trades, we want to see the bear break out into a trend, give us a pullback before we go all the way down here. And if we get a decent enough pullback after bear breakout beneath a trend, lower high, fantastic for us to trade with all the opportunities to trade here. So we use the 10 EMA as an indicator of a trend, just because we don't want to keep on drawing these trend lines. Bull trend line breaks. You can draw another one. If you look at enough of your charts and you put in the 10 EMA, you'll see it's a very close approximation of a trend line in a strong market. And that's what you want to rely on. So instead of continually drawing the lines, just look at the 10 EMA. The market breaks beneath that and close beneath, give us a couple of candles, we are happy days. So let's wait and we will have a look at that. Hang Seng 50 was interesting for us earlier on. So now we have, let's put it up. So we had our low of the day down here. This is the midpoint of yesterday's trading range. So we have a double bottom that is forming at that level. So let's put that in there. Yeah, I'm just marking that as a 2, and I'll explain to you why. Second touch. Okay, so that we'll consider as our second touch, and that we're going to consider as our first touch. So at the open, we're trading range price action. We kind of stayed through and observed this and looked at it and tried to find ways to come in before the market closed. Just was not an opportunity, but it's trading range price action. Now we have a higher low, double bottom. That double bottom is a higher low from there. It's the middle of, somewhere in the middle of the day's trading range. Remember, this trading, this midpoint here is midpoint of yesterday's range. So if we look at where we are presently, there is a low of the day. There is a high of the day. So this price action is taking place in the midpoint of today so far. So we are in the middle of a trading range. So why are we interested in marking this double bottom and double and top if we're in the middle of a trading range? Well, if the bears break beneath that, then things get very interesting. If bears break beneath this trading range here, break out down here, we come into a low, a critical low for us, the low of the day. And that's where we can start to look for opportunities. If the bulls, on the other hand, if the bulls are strong enough to break out above this trading range, we get to here and we get an opportunity to trade. Now, I said to the guys in the session earlier on, you can be trading every single candle, every single little pattern as a scalper, and that's perfectly fine. Take 20, 30, 50, 100 trades a day. At the end of the day, when you collect your bag of coins and you weigh them, you say, man, I created so much wealth today, and a lot of work, and that's perfectly fine. Some guys are scalpers. So whereas I'm waiting for distinct patterns, which when I take these trades, I want to manage them and extract for myself, 5 to 1, 10 to 1, etc. when they come. Last week, I only took I took one trade, but it was multiple trades out of a pattern on one chart, which was the Hang Seng 50, and also the DAX. So 2 markets that I traded. That was just on the one day, but the returns were magnificent. I would not need to trade for the rest of April to be very happy with myself, but I had to wait for that setup to come. If you are a scalper, you say, hey, George, I'm not going to wait for that. Every time I see it, I'd rather be in the market constantly. Every time I see it, that's a double bottom. I'm not going to be like you and wait for a high low. I don't care whether it's in the middle. I'm just going to take it, put my stop here. If it goes up and turns, I take my few pips out and I put my coins in the bag, because at the end of the day, it's just going to pile up. That's a legitimate way to trade if that's the way that you want to trade. But the way that I am showing you how to trade is wait for these distinct patterns. When they set up and when they come your way and you execute them, I think you will extract a lot of wealth comfortably from the market. So we want to wait for the measured moves to come up and materialize for us. Now, what happens if from this double bottom, we get acceleration, strong bull candle? In other words, a trend candle closing on its high, and we get a follow-through candle, and then we get a follow-through candle and we break out above this level. But we don't accelerate to that level, and the market turns back and there's a pullback that bounces off the moving average. If you see that, then you can take that trade, stop beneath here, and you see trying to get to that level. Okay, because now we're looking for trend breakouts and pullbacks. but it must break out of something, must break out of the bottom, break out of that time, must pull back, give us a decent bounce of a moving average, then we can trade it and see if we get to that level or test that, or whatever the case may be. Okay, let's just put everything up for a few moments. So remember, guys, the price action patterns that you see me emphasizing and repeating, they will occur in any market on any time frame. So you don't have to have these 8 markets that I'm looking at to trade. You can trade any other markets. If you really want to just get good at it, you can even scale back. I think I have said a few times before that all that I traded for a long while, at some point it was just the Aussie dollar, actual Aussie versus the dollar on the 5 minutes. That is all that I traded, and it was quite strange for people. I mean, I live in this zone where I could easily trade any other market, but why would I trade the Aussie when it's like nighttime? It was comfortable for me, and I really focused on that and really got good at looking at price action patterns. And I started adding on the different markets to it. And now I'm comfortably looking at these 8 markets. Okay, UK 100. We were anticipating, we were hoping that if we got that, would come back and create a lower high, but we got, a lower high, which is not tradable in any case in the middle of the trading range. Why is it not tradable? You've got a tail at the bottom, you've got an inside, you've got an outside and inside. This is trading range breakout mode. The market will break out and there'll be a failed breakout. So you want to wait and trade extremes. Let's wait for extremes. Oh, let's put up Nikkei 225. So that's an interesting higher low for us. So the fact that the market is accelerating towards it does not mean that we're going to have a bear trend or bear breakout. We only get a bear breakout when we get the bear breakout, which would mean candle closing beneath this and follow through. If we got that and a pullback to test that level, then we have to jump into the trade. But we need to wait to see if the bulls that stop the bears here. Very strong bearish price action, bulls stop the bears here to create this higher low. If those bulls are going to come back in the market, if they do and give us a reversal, that becomes point number 2, touch point number 2. Okay, so if we do get that, yeah, so I might take it off if you don't get the reversal. But if we get that reversal here, whichever way it may be, it could just be a 2-bar reversal. It could be a trading range price action inside, outside, whatever the case may be. It could be a candle with a tail. If we get the market turning here and give a 6 candle separation, then we know this higher low double bottom is holding, and we just need to look for an opportunity to go long. If the bears are strong, they need to give us a strong candle. They were strong here. Now they came with strength and failed it. But then we had a dodgy sideways price action. So we never assume a breakout until we actually get the breakout. So we will come back and have a look at that. Euro we've spoken about. Bitcoin needs to get up here before we can trade it. So I'm not sure if you're watching all of these cryptos. Big bear breakout, failed. Would this be a surprise to you that it's failed? Okay, so this is on the daily. So if you're looking at this today, or if it was yesterday and you saw that candle, the bears would have loved yesterday to do a measured move, right? If you're a bear, so I'm just looking at the previous day. So yesterday, looking at the previous day, you'd have said, oh my goodness, look at this huge bear candle. We would like to do a measured move, because we want to follow up this big breakout. But instead, on the day, the bears did a good job to still create a bear candle. But why did they fail yesterday to give us a measured move? If you go back to the scenario assessment that I'm starting to hammer on, if you were in this particular day, you look back 3 candles, big bear breakout, good tick for the bears. You go back another candle and say, oh, hang on a second. The bears broke out beneath a bull candle. That is a terrible signal candle for the bears. What the bears would have loved is for, yes, let's have a bull candle, let the market come and test the moving average, give us a 2-bar reversal so that we are going to take our trade beneath a bear candle, or let this very same candle be a candle closing on or near its low. Then that would have been a strong signal for the bears to get in. Okay. So this 2 here, we're going to bring back and have a look at it as far as it's on the 5-minute time frame. Okay. So now if we get back to UK 100, I'm not sure if you guys heard me. It looked like my screen had frozen for a moment. So what was I looking at? Just quickly go around and make sure. Okay, Bitcoin daily. All right, excellent. Bitcoin daily. Hey, thanks for the feedback, Richard. Okay, so Bitcoin daily. So you would have, okay, so whether it's on the daily or the current chart that you're looking at, if you get a huge candle going in a direction and the signal candle is not in the direction of the trend, so this is not the kind of high test candle that you would trade, you must expect that the market will fail. It's a poor signal for the bears. It might fail today, on the day, or the next day, or whatever, but that you must expect. So seeing that pause is not a surprise. All right, guys, that's definitely a problem on my area. My fiber has gone down. I've just had to switch on the dongle, so apologies for that. But Bitcoin, we have to get back to this level for us to look for opportunities. Let's have a look at UK 100. So we didn't get the opportunity to trade, but our levels are still valid. I want to see what happens when the market gets to this level. So I'm still looking for trading range price action to see if we can go short. If the bears are able to bring the market down to this level, then it's going to be a double bottom that we are looking at. Let's have a look at the GE30. So very interesting. This level here was the low of our day. So this is a failed breakout beneath the low of the day. That is just transpired. And a huge reversal that has taken place. And this was at 1305. All right, I think I'm gonna have to. So reversal that's just taken place. So here's the point. Whenever you see a breakout, you always, or whenever you see price action that you think is a breakout, you need to see the follow through. So this was our low of the day, huge bear candle. When you're looking at it, it was like, oh my goodness, the bears have taken over the market. But if they had to give us a low beneath here. But we still have the same problem that we had when we're looking on the daily time frame in terms of the Bitcoin. So that's probably what you are letting us to Richard. That's the same structure we had on Bitcoin. Huge bear candle, but we're breaking out beneath a bull candle, and that's a very poor signal. So when you see that, you've got to expect a failure to take place. So don't jump into any trades, wait for more information. So what we have now, that's a new low of the day. So that's a new low of the day. So failed breakout beneath that. Am I going short? No, I'm not going short. The case has been built up for me here for possibly going long. So there was a low, failed breakout beneath the low, market's done a decent enough 2-bar reversal. So what I have here, this is a lower low double bottom. Okay, with a low here, this is a lower low double bottom. The market has bottomed here, tried to bottom here, failed, tried to bottom here, failed, but that micro double bottom, 2-bar reversal. So that's a double bottom, it's a micro double bottom. That is also a double bottom. So that's a lower low double bottom. So this is absolutely fantastic. All we need from this lower low double bottom is a higher low double bottom for us to trade. But if we're going to trade it, remember the 6 candles of separation. I need at least 6 candles of separation between any point I'm looking at and when I take a trade. So this failed breakout here, I could have called that, okay, that's also 2. But because market did not accelerate beyond that, it tried to break again. The bears tried to break beneath that, pull back, failed to break, failed to bottom, failed to bottom. So all of this is within 6 candles. The magical 6 candles by George. It's a decent enough separation. You need price separation, for you to consider a level to hold. So that for me is a lower low double bottom. And what I'm now looking for is either another bottom here or a higher low bottom, and I can look to take DAX 30 long. Now, what are the possible scenarios that could take place if we end up? So we got 3 minutes. to the close of this candle, and that's when we close the show. So if this ends up as an inside candle, an inside candle and an inside candle, so inside pattern is a breakout mode pattern, which is beautiful for our scenario to try and find longs, because it would mean if the market breaks out in that direction, the direction of the candle, if it ends up like that. So if you're going to be watching this, remember, most breakouts fail, so you anticipate that there will be a fail at some point. So it might fail at the test of 50% pullback of yesterday's range. And at its failure, the bears might want to resume. They will resume the selling if it fails there. But we are waiting for a higher low. If we then get a decent enough reversal, 2-bar reversal in here, you have to take the trade. Okay, put your stop here, your third touch, take the trade. If you kind of think, oh, maybe I might get another attempt down here, then put your stop at a measured move if you want. Okay, but if you get a higher low somewhere near, you can just put your stop here. And you gotta then hold onto the trade and see if we get the test up here. Now, what of the, we're not trading reversals, George said, we're not looking for trends, pullbacks, but so that's exactly legitimate. We're coming off a trading range. We want to see the breakout from that trading range bottom, pull back, and then we want to take that first trade, and hopefully we'll see acceleration coming up. So that's something worthwhile to look at. Let's have a look quickly. If anything else is setting up for us to have a look at. S&P 500, nothing to look at. We'll look at it when it comes to the open of the US markets and see what we get. Gold has not given us any entry. So the market is still accelerating. We at the measured move at the high of yesterday. So the market is creating a new high. There's nothing we're going to do. If it carries on like that, just leave it. We're not going to jump into, if you don't want to jump into any longs here, your stop is too far away. So nothing for us to do there. And Hang Seng 50, we're away. So the most interesting one, most immediate to look at is DAX 30, German 30. Keep a look at it. And if you're still tracking Wednesdays at the market, we will see you shortly. There's something I just want to put in on the chat forum. So the Wednesdays at the market that is free for everyone is the one that's taking place the second Wednesday of every month. However, if you want to participate, I've just posted on the chat group, the third and fourth Wednesdays of every month is an exclusive coaching session that's going to take place. So that's 16 hours every month where we go into the strategies in greater depth. That's purely closed for those who subscribe to it. In addition, when you click on that link, in addition to the Wednesdays at the market, the third and fourth, there's also 12 hours of group coaching on those strategies that can yield for you greater than 2 to 1, 3 to 1, the 5 to 1, 6 to 1, 10 to 1, cumulative returns out of any particular move. So have a look at it, and we will see you in the later session, or we'll see you the second Wednesday of May, or we'll see you when you subscribe, and let's have some fun in the private coaching sessions. Take care, guys. We'll catch up and we'll see you later on.